Today, we are going to talk about term life insurance. How does it work and how much does it cost? Let's start with how it works, and then at the end of this video, we'll look at an example of how we shop for the lowest rates possible. So with a term life insurance policy, we've got a few pieces here. First, we've got the premium. This is the amount you pay every year. Whether you're paying it yearly, you could also pay it on a monthly basis if you'd like, but the premium is the cost of that life insurance policy. Then we've got the term. This is the number of years the policy is active. And then we have the death benefit. This is the actual amount of life insurance. And if you die, that life insurance benefit is paid out to your beneficiaries, and it's also paid out 100% income tax free. Usually, people will get a term life insurance policy if they're looking to get life insurance at a very, very low cost. If I'm looking for a certain amount of life insurance coverage and I want to spend the least amount of money every month or every year, I just say, how do I get X amount of dollars in insurance at the lowest price point possible? A term life insurance policy typically will accomplish that. Let's take a look at an example here. So again, we've got our premium first, then the term, which is the actual number of years the policy is active, and then our death benefit. So let's pretend you're in the market for a $1 million term life insurance policy. And we'll pretend that you are 40 years old today and you would like it to protect you for 20 years, up until the age of 60. So you want a $1 million death benefit. You want it to last for 20 years. And we'll assume that the premium costs $1,000 per year. So what this means is every year you'll have to pay a $1,000 premium. And if you die at any point in time during that 20 years, what happens? The death benefit of $1 million is paid out to your beneficiaries, 100% income tax free. What's the total dollar amount you'll pay over the life of the policy, over the 20-year term? $1,000 times 20 years is $20,000. So you paid a total of 20 grand over 20 years to protect yourself or insure yourself for $1 million. So it's $1,000 a year, or maybe you pay that monthly, which would be $83 and change per month. It's a nice option that's available to get coverage at a very, very low cost. That's typically why people purchase term life insurance. We've got cash value down here. Term life insurance does not build cash value. A nice illustration I like to use is this. It's a lot like rent, where I'm paying rent every year. I've got my insurance policy in force, so if something bad does happen, life insurance is paid to my beneficiaries. However, with rent, I don't build any equity. So it's just a low-cost life insurance policy similar to auto insurance. I'm paying a premium to protect me if anything bad happens. So with a term life insurance policy, how do I make sure that I get the best deal possible? Well, when it comes to term life insurance, there are a million different ways you can shop it. You've probably seen online advertisements, TV advertisements about Joe Bob got a term life insurance policy for $15 per month. And it's probably true. I'll show you how we shop it at our company. So if anyone's interested in a term life insurance policy, the first thing we do is collect some basic information. We've got Mr. Insurance here. Let's pretend he's 40 years old. A $1 million death benefit, meaning if he dies, $1 million is paid out. The class, so this is his health rating. How healthy is he? If we go standard non-tobacco, let's assume he's got some health issues. Maybe he's a little overweight. Maybe he's on high blood pressure medicine. He's got some health issues, but nothing drastic or nothing very serious. So we're going to start at non-tobacco to shoot things conservative. And let's look at a 20-year term. What we'll do here is just get a quick quote so you can get an idea of how much the term policy will cost on a yearly basis. And this is nice because, again, it just gives us a really quick idea of what things will look like. We'll have to complete an application, and then we'll get a formal quote, but again, this gives you an idea very, very quickly. It's literally clicking a couple of buttons and we see it just like that. So here we go. For our 40-year-old Mr. Insurance, we see a couple top companies here. There's a lot of them. But if we look at the far left, we'll see the lowest by 6 cents per year compared to the next best. So a lot of companies are very competitive, but it costs less than $1,200 per year. So if I pay that $1,200 every year for 20 years and I die during that 20-year time period, a $1 million death benefit is paid out to my beneficiaries. And I can also see how much I paid at the end of that term, $23,000 total. That's a standard non-smoker rating. What happens if he's healthy? And we'll end with this. Let's say he gets the best health class, super preferred. Same 20-year term. We'll pretend he works out every day. Look at that. Premium's cut in half. So your health rating is going to have an impact on the premium. This is the same 40-year-old individual. The difference here is that $1 million policy costs less than $600 per year. And what's also interesting, this company was number one when we quoted it based on a standard rating. And then when we look at the same chart, they're last on the chart as far as the premium pricing goes for that $1 million policy. Now, it's not a huge difference. You've got $573 compared to $619. But my point is, the health rating we receive is going to impact what company is truly in our best interest or is going to offer the best possible rates. The one thing we want to make sure of is that we're always looking at A-rated companies or companies with strong financial ratings. That's always important, in my opinion. But pretty straightforward. Term policy, I pay a premium. If anything happens during the term, the number of years that policy is in force, a death benefit is paid out. If I stop paying at any point in time, the policy goes away. But again, very straightforward. Let us know if this video helps and if you have any questions at all. And as always, I hope this helps. Thanks so much.
Hey guys, Steve here with IBC Global. Thank you so much for watching the video. If you're interested in a whole life insurance policy and you'd like to work with our company in setting it up, please visit our website, ibcglobalinc.com. We would love to work with you. If you have any questions, please leave them in the comments below. And as always, I hope this helps.